In this video, traders, we're going to look at the GBPUSD day trader strategy, where we're looking for an overnight breakout in the morning. I'll give you the rules in a moment. Stick around. Hey guys, warm welcome to GBPUSD, otherwise known as Cable, super popular trading vehicle for forex traders, and you can see why. Super tight spreads, especially with our channel sponsor Core Spreads Australia. Go and check them out. There's a link to them in the description below. Log into the Core Trader 2 platform and see how tight the spreads are on the currency pairs that you trade. So GBPUSD is perfect this kind of thing because you don't want to be paying high spread, you don't want to be paying crazy charges. You're on a very simple execution platform. Go in, do the trade, job done. So the rules for this are, well, theory, if you like, is that GBPUSD is very quiet in the early hours of the morning because Americans are asleep and Britain's just kind of waking up. So especially between sort of 12 and 6, so they're not really waking up, it's only waking up towards the end of it. So the theory is there's not much liquidity and not much volume. And if you look at a cable chart, you'll see that for yourself. So what we're trying to do here is we're trying to see what that range is overnight, and then we're basically going to join a breakout in the direction of the move, using that as a reference point in the morning as London starts to wake up, as the order flow starts to happen. So very simple, very easy strategy to execute. There's a slight variability about when it will break out, but you're not going to be sitting in front of the screen all day long for this one. It's kind of going to work or it's not. And the theory as well with this is that if you do have some serious institutional order flow coming in, then you're going to be able to ride this thing and it's going to give you a decent profit. And if it doesn't, the stops are reasonably tight as well, and so you're not risking a huge amount on the trade. Okay, so what I'll do is I'll go hit the Core Trader 2 platform in a moment, and we'll kind of look through how we place the orders and how to work it out using their charts, etc. Very simple to execute, but let's look at the rules in theory right now. So we're on a GBPUSD 15-minute chart. So 15-minute candle chart, recognizes as a line chart just for illustration, but it gives you the idea of how the time and how the range plays a part in this trade. So we're marking the high and low from 12 o'clock till 6 o'clock in the morning. That's UK time, by the way. So wherever you are in the country, or in the world, should I say, change it for that. And it's important that time's right, because we are based, this is a kind of a time-based trade. Like I say, when everyone's asleep and no one's at the desk, or unless it's a news-based incident overnight, of course, and this will probably change the metrics completely. But majority of the time, we're going to get a low range. So we're marking off the high, we're marking off the low. There's our range now. Now, we don't care whether we're going long or short. We're looking for a break of that range, and we only take a break of that range after 7 a.m. So there's a window of time between 6 and 7 where we don't take the trade. Okay, so we don't get involved in it within that window of time, because sometimes there's a little bit of noise, but it's not a clear drive. You know, there's some order flow coming in. Some people are waking up, some people are at the desk, some people are taking deals, but it's not really the full fat version yet, if you like. So from 7 o'clock, that's when most people are at the desk in the city. That's when the orders are going to really start flowing, and then 8 o'clock really starts shoving it. So we don't take it between 6 and 8, but from 7 we can take it all the way up to, say, 9 a.m. So any point after that, if it breaks, we take it. So this is what happens as we break the range. So in this example, we've got our range in there at 8 a.m. It could be any time after 7, by the way, but happens to be in this example 8 a.m. We break the lower end of that range, we initiate a short position. Our stop goes in above the high of that 12 till 6 o'clock range. Very simple to put in, very easy to work it out. It's pre-planned for you. And then we're looking to close that trade after 1 hour worth of move, or we're going to get stopped out from this. So the idea is, the theory being that, you know, if we get that real push and real sort of money flow coming in, this thing will travel many multiples of the stop, giving you a decent risk reward ratio. So the days it does, you know, you get some real jackpot type moves. And when it doesn't, it kind of drifts around. You're going to get stopped out. It's not going to hurt you that much. Now, you could add an additional kind of qualifier into this that says, hey, after 15 minutes, say 30 minutes, I pull my stop to break even. But, you know, that's up to you to work out. In reality, this stop is going to be so tight most of the time because the range is so narrow that, you know, you may not want to even bother doing that. Okay, so we take a trade and the stops are the width of the range, so quite easy to do that. One thing, sort of extra parameters here, guys, actually we close the trade after an hour, so that's the exit, wait for 1 hour move. So if we took it at 8, we close it at 9. If we took it at 7, we'll close it at 8, 7:30, we total at 8:30. So we're looking for an hour worth of move on that trade. One thing to point out here, guys, is that the reversal is possible if stopped out. So I think it's okay to do this once. Now you may not agree, and again, it's very personal trading, not recommendation or anything like that. It's just purely some ideas to seed, get the juices flowing for thinking different setups and strategies and perhaps markets you wouldn't otherwise trade or methods you wouldn't otherwise trade. If you kind of get stopped out and it comes back in, so let's say you take a short here and it pops back out and stops you, I think you're okay to re-enter in the direction of the move, because you might get a little bit of noise in the, that's why I try to avoid that 6 till 7. You can't eliminate everything. If you get a kind of fake out the reverses and rips back up, you get stopped, you could put a kind of double stop if you like to get yourself back in the trade. Now it's going to depend on the width. You might not want to be getting whipped out back and forth or back and forth, but some cases you do get that little kiss below that rips back up. Now if it's going all the way down on a decent distance and then coming back up, you don't want to take the trade. But let's say the first 15 minutes comes down, comes back up, takes you out, you might then want to go in the direction of the actual move there. As long as you're not taking too much risk on the deal, I think that's fine. And then another thing, guys, is we're moving the stop to break even after 15 minutes. And I gotta say, that's an optional. You can if you want to. That stop may be so narrow that you're not that bothered about that. It might be kind of not really worth it. You might say, well, I still want to frame that range and do that. So that's the kind of overnight GBPUSD breakout strategy for day traders. So let's hit the screens now. Let's check out the Core Trader 2 platform and work out how we'd structure this, how we'd kind of put our lines on, how we'd frame the trade, how we'd work out our stops, how we'd put our orders in. So we can very methodically trade this and execute this if it came up and if it suits your risk tolerance as well. Let's hit the screens. All right, guys, so I'm logged into Core Trader 2 from Core Spreads Australia. Let's have a look how we'd frame this trade up for GBPUSD, how we trade GBPUSD using that overnight breakout strategy for day traders. So first of all, we can navigate to it using the Market Explorer. It's going to be in the popular markets, popular one cable, guys. We know it is a very good trading vehicle, and spreads are tight. Spreads are tight on Core Spreads Australia. That's kind of their USP, really. Simplified execution venue with tight spreads, and GBP is no exception to that. Pretty decent spreads, I have to say. We don't want to trade from the chart for now. I just want to kind of line up and this trade and get this trade navigated and sorted out. So let's have a look. Let's get rid of the tooltip. Well, we can use a tooltip to kind of work out where midnight is. We can see it anyway on the x-axis. So fine. So let's look at this example here. Let's minimize this a little bit and see. So first of all, we need to draw some horizontal lines in, right? We need to kind of frame this high and low from midnight till 6. So we've got a level here. That's at 9 o'clock. We wait until midnight, so our high is going to be around here and our low is going to be around here, because midnight starts here and 6 o'clock ends here. Now, don't forget, the rules of the strategy are we don't take it until 7. So this is an irrelevant break, guys. We're only taking this if we see a break after 7. So this is 7 o'clock. So from this candle onwards, great, we can see a break. Now we see a break to the downside here, and that's when we'd enter the trade. This is where we'd have a short trade here. We'd enter the trade short. We'd have a stop here. So very simple, very effective. We've got our range here. We've got our kind of levels all marked out. If we want to put them on, if we want to put on a rectangle, of course we can do. We can bracket it and frame it and put it in and do whatever we want to make it more appealing and more visual for us, so we can see exactly what we're trying to trade. But I think you get the idea. So after we break out, I didn't really want that one, did I? We can right click to delete very simply. If we break out, then we're going to take the short. I can let me show you how we do that actually when we're putting a trade in the actual broker platform. So let's imagine that we were kind of trying to bracket an order here. Core Trader 2's got enough good logic in it that it won't let you put an erroneous limit or stop in. So it won't let you put a stop in, for example, that gets filled straight away, unlike some brokers. So these guys, they're not trying to scam you. If you get it wrong, it will just go in as a limit. So for example, let's say we're putting a buy in. It will assume that if we have an order level below the market, that it needs to be a limit because the price needs to come down to it. And if the price is above the market, it will assume that we want to put a stop in. So that would either be an entry if we haven't got a position already, or we'll stop out of position. So the logic is sensible, and obviously the counter is true for the sell side. So for example, if we were taking that trade, and let's say we wanted to, let's make up some numbers because, like I say, won't be able to actually do the trade we want to order-wise. Let's say we put it here. Then if the market comes down to 1.315, then we're going to be in the trade with whatever quantity we put in, £5 a point, £10 a point, £1 a point, whatever that may be. Now I want to attach that stop to it. So the stop here then would be, whatever the distance was away. So it's 1.319, for example, 40 points away. I don't think it was that much, but you get the point. That's where your high of the range would be. So that's the low of the range, that's the high of the range. Very simple to put in. And the limit, you can either put a limit in, or of course just wait for the trade to have its hour long. Now you obviously duplicate this, so you create another order. Once you've filled this one, you create another order, and that would be on the buy side, and that would be the upper limit, and the stop will be placed at the lower limit. So just doing the opposite to what you're doing. So again, you're getting into the trade if it breaks, and you're coming out and you're only getting stopped out, should I say, if it then comes the other way. Or at least then you're kind of focused with the trade, and it's very easy and mechanical to place the trade. So that's the overnight GBP USD breakout strategy, guys. Take care and keep the risk managed, whatever you're doing. I'll see you in the next one. Bye bye.